Hi guys, welcome back to the channel. So today what we're going to be doing is we're going to be covering the RSI and how I use the RSI within my strategy. The RSI on its own, it's important to remember, can be used as a strategy, right? So what I'm going to do is I'm recommending that you guys go through the other previous videos such as support and resistance, the moving average video, the market structure video. What this will do is it will allow you to see how we come to conclusions based off the RSI as well. These can be used in multiple ways, and I'm going to cover as much of it as I possibly can. So without further ado, let's get moving more than average.
Yeah, guys. So we're going to cover the RSI. So the first thing about the RSI that you need to take into account, we're going to look at the bottom here. The RSI is a momentum indicator, i.e. it indicates the power that a market has when it's moving in a specific direction, right? So what you guys take into account is the levels within your RSI. So first and foremost, my period for my RSI is 10 to signify 10 months, 10 weeks, 10 days, 10 hours. As I'm a day trader, those time frames apply to me, and the way the RSI functions during that time coincides with the way I trade, right? So the first thing is the 70 level is considered the overbought territory. The 30 level is considered oversold territory. Now, guys, just because you're saying the words oversold or overbought, it doesn't necessarily mean that the market is going to buy at this area here and sell at this area here, right? The thing about this is I don't use, me personally, and there's nothing wrong with whoever does it, right? I don't use them for that. We use it as divergence. So we use it as part of our strategy by using it for divergence. So what we need you guys to understand is the specific levels and how they function. When the market is between the 50 and the 70 territory or above a little bit, right? That's considered bull territory. So we're in a buy market. When the market is below the 50 and the 70, like in between the 50 and the 70, sorry, that's considered a bear market, right? We can obviously be below here. So how do we use that to our advantage, right? What we do ideally is we look for divergences in the market. So indicators coming from the RSI that we are potentially going to buy or potentially going to sell, right? And how we do that is we spot it through divergence like you see up here. So what divergence means is the RSI and the charts don't move the same. They're moving in exact opposites of each other. So there's two different kinds of divergence that we use. There are three in total, but I'm only going to cover the two that we use because it helps in our confluences, right? So the first one that you need to take into consideration is regular divergence. So you get regular bullish and regular bearish. This is where the chart itself is moving in a downward direction, forming a series of lower lows, right? Whereas if you look at your RSI, the market is forming higher lows. See, they're moving in opposites of each other. In a regular bearish divergence, the market's making a series of higher highs, and on your chart, it's making a series of lower highs. Those are indications to us that, so these will happen prior to the market making its actual move, right? So these are an indication to us that one of your first indicators that we might change direction within the market, right? Then you get hidden bullish divergence. So what hidden bullish divergence is, the market's making a seed. So this is more to be seen as a continuation. So maybe we were in a retrace and then suddenly you see hidden bullish divergence. So we're in an overall uptrend, we got a nice hard retrace, now we're in, right? So hidden bullish divergences are normally seen in that kind of manner, if not completely just breaking it out. And I will show you guys a couple of examples of all of these on an actual chart, right? So in hidden bullish divergence, the markets are following structure basically for a series of higher lows, right? And then on a chart, it's forming a series of lower lows. This is an indication to you that the market will still continue to the upside, right? So when you kind of getting caught in a retrace or something, you kind of look out for these things depending on your time frames, right? For hidden bearish divergence, the markets once again follow structure, forming a series of lower lows, where on the chart it's forming a series of higher lows, right? And that's how the divergences work. Um, these are the ones we use the most, simply because this that coincides with our other analysis, and you guys can have a look at our other videos. Yeah, this coincides with that, and it kind of brings your confluences together in a better manner, because the RSI basically makes you see things before they even appear. So this is like the last thing you look for, or the first thing you look for, depending on where in the chart we are and what we're suspecting. So I will show you guys once again, like I said, an example on a chart, and that's what we will be doing next. Right, guys, so I'm going to show you guys an example of hidden bullish divergence. This is a perfect example here. Here you see the market made a higher low to a higher low, and here it made a higher low to a lower low, right? Do keep in mind that if you watch the previous moving average videos, there is a chance that the 50 will come get tested, right? And then we'll still be looking for hidden bullish divergence, but then it would need to be here. Right, this needs to be the hidden bullish divergence, right? So one thing, guys, in order for the divergence to be valid and the momentum to be confirmed to the upside, right, the 50 cannot break below here. The 50 can break if we do this one. Yes, it can. Then we'll catch an earlier entry. However, for this current one, we only confirm a bullish market once we come above the 50. Remember what we covered? So if this divergence is valid, the 50 MA will respect this RSI will respect the 50 area, and then it will shoot to the upside, right? And that's kind of when the bullish divergence will pan out. Right, guys, I want to take you through regular bearish divergence quickly. So regular bearish divergence, like we covered, is a higher high to a higher high, and then on the other side, it's a higher high to a lower high. Then immediately after that, you see how the market dropped. So you see how the market kind of lost momentum. We were moving. Your first signal was here. Hey, this high didn't actually reach the previous. We're actually losing momentum, right? We came up, it finally found its peak close to the 70 area, and then the market melted. Then all you had to do was wait for a clear confirmation, because we don't want to enter above the 8 MA on a sell just yet. Once this broke, this was your entry candle, guys. Bang, gone all the way down. You could have chased the 50, but for scalp sort of, no, not necessarily scalp because we're on a daily chart, but you could have chased that or the entire move. That would have been dependent on you throwing out your Fibonacci, right? You throw out your Fib, let's say for example from up here all the way down to figure out a target. So let's say we wanted to do that, but right, there's my confirmation candle. I got a 61.8. My first target would be here, right, which is perfect confluence for me to take this there, right? So guys, I want to show you an example of regular bullish divergence. So regular bullish divergence, remember on the chart we have a series of lower lows, exhibit A, and then on the RSI we have a series of higher lows, exhibit B, right? So an example of that is, so here the divergence came in, it confirmed bullish here, the divergence kicked in. Along with all your other confluences, you could have taken this buy. So to see what other confluences there are available to this, you're welcome to check out my other videos, right? This is actually something interesting, just want to mark it off. So essentially, the market makes a downward move, and then makes an upward move, and then we move upward, right? The RSI is basically telling you which direction we'll be changing in over time. Then another thing, like just while we're on this, and I only spotted this now, there's also a good example of hidden bullish divergence as well here. Here's a lower low to a lower low, well, a higher low to a lower low, and here the market's moving in an upward direction. Yeah, so that's also another example of hidden bullish divergence. So the nice thing here is we finally broke structure, like to kind of break through this range and kind of go up. So the final one I want to show you guys is hidden bearish divergence. Now this is a little bit more difficult to spot, like in my personal opinion. Very useful one though, don't get me wrong. But it's important that you guys understand all of them, right? So in this case here, you'll see the market forms a series of lower highs, and on the other side, the market formed a series of higher highs. Like here, look where we are up here, but look where we are all the way down at the bottom of the other side. Look where we are here, but look how high up we are there. That's a continuation sign, right? And observe what the market did. It came, completed the divergence, gave us a little bullish engulfing, and we caught this out all the way down. This, guys, combined with your other strategies and other things that we've shared, can really prove to be very useful for you guys. And we definitely recommend going over the past videos as well, so that you can stitch everything together. There will be an upload happening soon with Confluence, where I do an entire analysis just to show you guys how we do it. And yeah, that's bearish divergence. So finally, guys, I'd just like to thank you guys for watching the video. I came back to this portion just to you guys. I mean, you can take a screenshot of it. You can do whatever you need to do. Like, this is just to kind of guide you on what to look for in terms of you how to use the RSI divergences. I hope you guys enjoyed the video, and if you do have any comments or questions, or you'd like to reach out to us, comment in the section below. Reach out to us via Telegram. All relevant links are below. Be sure to like and subscribe, guys. And without further ado, let's get moving more than average, guys.